All right, let's get rolling here this morning. So we got the Fed coming out today at 2 o'clock. I sent this out yesterday. Let's go over this, and we'll go over today's market and what we're looking for. Get this down here real quick. All right, so let's go over the whole session yesterday from the open, 9:30 until the close. Get this off here real quick. All right, so I want to go over how we trade the 5-minute opening range when the New York opens up and use our algorithm with the 5-minute opening range. So all the 5-minute opening range is that the first 5 minutes of the New York Open, the swing high and the swing low. So once we get that established, the swing high and swing low, the 9:30 open, which is the swing low here, and the 9:35 high, the swing high in the first 5 minutes trading. That's going to show you the energy of the market for the entire session until the next day at 9:30. So that 5-minute window will give us an idea where the best setups could happen off of with our liquidity grab entries. So this first 5-minute opening range is good for the entire trading day. So we'll show you the energy of the market. If you're above the 5-minute opening range, you're bullish. If you've been outside the opening range, you get back inside of it, you turn back bearish. And if you're below it, you're bearish. So above the opening range, you're bullish, looking for buys. Oops. If you're above it, you're looking for buys. And if you're below it, you look for shorts. You will look for the liquidity grab. There's only 2 trades we like to do in the room. Liquidity grab 25 buy zones, liquidity grab 25 sell zones, and then also your yellow trigger entries. So we want the yellow triggers to fire in the direction of the opening range to give a push in that direction. Okay? That's simple. You can keep the 5-minute opening range on your chart the entire trading day. So let's go through this entire trading day. And the market was sort of consolidating yesterday, waiting on, we have big Fed news at 2 o'clock this afternoon. So 2 o'clock this afternoon, we're going to see if the Fed's going to lower by 25 basis points. That's what the market's counting on. Right now, the daily charts, we're in a hard uptrend, and I'll go over that in a second. On the 2-hour chart, we're in a slight pullback, and I'll show you what the breaking point in the market will be today in a second. So when you had the opening range open yesterday, the first 5 minutes here was a low, here's a high. You mark it up. That's these white dashed lines. You can put them on there. I'll do them again this morning, and tomorrow and Friday, I'll put them in the room. But basically, if you're above it, you're bullish. You're below it, you're bearish. You're looking for sell setups below, buy setups above. So then we can simply look for our entry levels. We can look for the market, as it did here, to get inside of our 25 buy zone, or turn a yellow trigger, and it did. Here's our 25 buy zone. This is where they like to grab liquidity. It's where the smart money likes to pull the market back to and like to reverse it. There is a 25 buy zone and is inside of our trend filter also. So that's why you got a yellow trigger entry. 63.5, just under 73. So almost 10 points on that first trade potential. Then it came back inside the opening range, which weakened the market. Got a retracement. We got a yellow entry candle that fired off. Your speakers will go off here. This is 53 down to 42. Another 11-point potential play. So you had over 20 points potential into trade setups and they were both off of the opening range. This is a 5-minute opening range liquidity grab they did to bring it up. And this is a 5-minute opening range liquidity grab sell where they brought it down. And so you can trade off those based upon the opening range. Now, it happened here also. If I go back, this is the previous day. We had 3 back-to-back sell signals. At this time, I'll leave this opening range here because I want it to stay here till 9:30, but the opening range was up at this level. So if I look at the opening range at 9:30 to 9:35, right there is your opening range. 9:35 would be here. Right there. And 9:30 high would be about right in there. So you can see what the market did. At 10 o'clock, 30 minutes lower, it got below the opening range. My trend filter was red, so we're looking to short. It got inside my trend filter, gave a red arrow on this candle. These do not repaint. This showed that the market brought it back up. They grabbed liquidity, retested the 5-minute opening range from 9:30, 9:35, and gave a beautiful sell signal. The potential here was 70 down to 57 or 58, 12 S&P points again. Market comes back up. We're still below the 5-minute opening range. Here's the opening range showing the pressure in the market. We're still below it. You got the yellow trigger inside my 25 sell zone. This is where they like to bring the market back, grab liquidity, take the counter trend traders or the rolling position traders out of the market, get a yellow trigger entry, potential 60.5 down to 48, another over 12-point potential, 11 to 12-point potential. So just out of those 2 trades, over 22 points of potential. And we come back up again, still below the opening range, pressure to the downside. We're still red on the red trend filter. Comes into my 25 liquidity grab sell zone again, gets a yellow trigger entry reversal, and once again, 51 3/4 down to 41, over 10 points. Between 3 trades, over 30 points of potential going with the opening range trend. Keep it simple. Don't make it any more difficult than that. Okay? 3 back-to-back trades just in the morning going off the 30, just the 5-minute opening range. So now we'll keep the opening range on here today until 9:30, and we'll put it up, and then we'll try to find some entries off of this. Now, I want to show you the trend of the market right now. I have this blue line up here for a reason. So we talk about this all the time. If you're an institution or you're a bank or a hedge fund or what have you, there's no magical moving averages out there, but one of the main moving averages they like to use is the 50-day moving average. So whether you use an exponential or simple is irrelevant, but you can see that once you put this on a 2-hour chart, it gives you a great feel if they're trying to mark the market up, or what's called melting the market up, or they're trying to mark the market down, or what's called melting the market down. Now on the daily chart, we are up. So daily chart, we're up. So the 2 charts I like to look at, I like to look at the daily before trading and then for the session. And the daily gives you a really good feel for what your bias is going to be trading futures for the day and the overall push. So if I would look at the daily chart, we broke out on May the 2nd. May the 2nd, we broke out on the daily chart. We've been testing this level all the way up. We did not break down and close below it until November the 17th on the close. And then we had a hard push down from the 6,600 down to the 6,500 level. But then what did we do? We got right back above it again. And so we got right back above it. And now we're going into the Fed meeting. We're in a bullish stance. So until we violate 67.61 on the daily chart, This is the only time that the market was really in a vulnerable area to the downside, right there on the daily chart. And I can switch that now over to the intraday charts to help me intraday to know if I'm going with it. I like to put up a 120-minute, which is a 2-hour chart, and I can see right away what kind of condition I'm in for the day for trading futures. So if I pull up a 120-minute chart, so let's narrow it down first of all at closer, but you can see what they're doing. They've been in a pullback phase right now. They touched it almost to the tick on the 9th yesterday. They brought it right up to that line in the sand of 73. As long as they're below this 50 on the 2-hour chart, the push is down. So I'll give you a little bigger picture to see what it's been doing the last 30 days, and you get to tell what type of swing that we're in. So if I notice right here, my bias ever since the beginning of November, shorts, buys, shorts. It's been nothing but buys all the way up until when? Until we close below on December 8th. And what's it been doing? We're in a consolidation right now. Are we in a hard uptrend? Will you see a hard bias to the upside on these futures? No, not until we get above out of this channel. We need to get above 68.59, and that's why I marked this blue line in your chart. You should put this blue line in your chart. It's a good break retest trading do with the yellow triggers in the 25 zones. So not only do I look for the 5-minute opening range. Let me put this back to 59. Right now we're at 68.59. 68.59. This level is a 50-day on the 2-hour chart. So if I know we're going to have a possible push up, and I'm looking for a yellow trigger entry day and possible big futures buy, I'm keying this 5-minute opening range right now, and then this 50 MA off the 2-hour. It's going to let me know, because I know my daily's already in an uptrend. So if I can match up with my 2-hour and get some buy signals, then I'm watching this key level of 59 all day today. That's a really key level for us to break out of. I'll leave this 5-minute opening range up all day until not all day, but all morning until 9:30. Then I'll adjust my 5-minute opening range. But you can tell what they're doing this morning for you European traders. Right after the London Open, right there, it touched it almost to the tick again. Right there. So this is a key level for us if you're going to be bullish in the market today again. I want to break 69.50, 68.59 to the upside. If it's below it, and let's say we get a 5-minute opening range that's bearish, we're looking to short today. If it's above it, we're going to look to buy. We'll start watching trade setups here at 9:30 to 11 o'clock. That's typically when you get the most buy and sell setups in that range. And that's what we'll do. Steve, good morning. Hey, Thomas. Hey, Leo. So that's what we'll do this morning. Put those on your charts, guys. What I like to do is I like to put the daily level, and I like to put the 2-hour chart level. So if I look at my daily 50, we're way above it, 67.61. But you should always have that down there, 67.61. This is the breaking point in the market, just so you keep your mind right. That's the 50-day on the daily. So that way, you know when your bias is on both sides of the market. You got your 2-hour going with you with the daily. We're above the daily. That's bullish. We just got to break out of here. We got to break out of 68.59 today. We can do that. You're probably going to see a lot of short covering. and we'll probably see a move. The only surprise in the market you're going to get today is that the Fed bumps more than 25 basis points. The market sort of built in a 25 basis point bump down. Or if the Fed comes out and lowers 50 basis points, which that's less than a probably 3 to 1% chance. No one's building that in. But if they do surprise the market, this market would do a serious, excuse me, parabolic move. So it's building in 25 basis points. It's 2 o'clock this afternoon. Heads up on that. And then I'll adjust the opening range as we come up for another setup. You can see this is going to be major resistance today. I will adjust these white lines. This is the 5-minute opening range. As soon as we get the first 5 minutes of the New York Open, we'll adjust that and get going. We'll watch those key level, that 59 level today also. If we see a breakout retest long off of a liquidity grab off that 52-hour chart, that's going to be a nice buy setup for today. So we'll keep an eye on that. I'll be in here all morning till 11 o'clock. I'll pop in and out, and then I'll make sure I change this opening range as soon as it comes up here at 9:35. I'll pop back in around 9:35, and we'll put those up. All right, any questions, let me know.